Imagine this, you wake up in the morning. And you are rich, you go to bed that night. And everything is gone, no war, no invasion. No bombs falling from the sky. Just numbers on a screen collapsing, to $100 billion erased. An entire decade of belief wiped out, and a country pushed into hunger, dust, and despair. No one panicked, that was the problem. So what actually happened? Why nobody stopped it? Why did this look safe to smart people? Why did the system do exactly what it was designed to do? To understand the crash of 1929, we have to rewind, back to the party, back to the music. Back to the moment America started dancing, right at the edge of a cliff. America after the war. Picture America in 1922. World War I is over, Europe is broken, but the United States. The United States is feeling unstoppable. Factories that once made tanks are now making toasters. Vacuum cleaners, refrigerators so modern they quietly say, "Iceboxes are for peasants." New York skyline shoots upward like it's on steroids, steel rises week after week. Jazz music floods the streets, loud, everywhere. Like the Wi-Fi of the 1920s, nobody fully understands how it works. But everyone loves it, and the economy, it's booming. People don't just feel hopeful, they feel certain. Even economists say things like, "Trust me." This decade is absolutely roaring. America believes the good times will last forever. Then comes Henry Ford. The moving assembly line changes everything. What once took 12 hours now takes 90 minutes. Model T cars roll out faster than anyone thought possible. Streets fill with automobiles, and once cars take over, everything connected to them explodes. Oil, steel, rubber, the economy isn't just growing. It's revving. Cities light up with electricity. Homes glow at night, and then there's the radio. By 1929, 10 million American homes own one. 10 million homes listening to jazz, 10 million homes listening to ads. For the first time, desire travels faster than reality. The cracks nitrogen monoxide one wanted to see. Rural America falls behind, while cities are parting. Rural America is struggling. Farmers who once thrived during the war now face collapsing prices, so they do what they're told. They borrow money to modernize. They buy new tractors, new equipment, but the machines don't save them. They just help them go broke faster. Debt rises, income falls. But nobody's paying attention because Wall Street is too loud. By now, worrying later debt becomes normal. Urban America discovers a new obsession. By now, pay later. Want a radio? Finance it. Want a car? Finance it. Want stock in a company you barely understand? Definitely finance it. Banks are thrilled. Installment plans are offered to almost anyone with a pulse. It's the financial version of saying, "Sure, let's get married. We've been on to dates." Debt stops feeling dangerous. It starts feeling normal. Wall Street turns into a casino. Then comes the stock market. Wall Street becomes Disneyland for adults. Margin loans change the game. Put $10 down. Control $100 of stock, the other 90, who cares? That's future money. Stocks only go up, right? Even the barber knows which stocks to buy. Shoe shine boys pitch can't miss investments. When your butcher, your barber, and your dog all start giving stock tips, you're already in trouble. Between 1924 and 1929, the Dow Jones quadruples, prices break free from gravity. Why look at profits when you can look at vibes? The line is going up, and so is my self-esteem. Warnings that got laughed at. A few voices try to warn people. They say, a crash is coming. Wall Street's response: buy more stock, go touch grass. Jazz keeps playing. Money keeps raining down. Nobody panics, that was the problem. Black Tuesday. October 29, 1929. America wakes up rich and goes to bed broke. The market doesn't fall, it dives head first into concrete. Ticker tapes spit out red numbers nonstop. Phones ring endlessly, traders scream, some faint. $14 billion vanish in a single day. Adjusted for inflation, that's over $200 billion. Not monopoly money, real homes, real savings. Real futures. Then come the margin calls. People who bought stocks with borrowed money are told to pay immediately. They can't. Fortunes disappear in hours. Banks and trust collapse. Banks start failing, and people run, not walk, run. They pound on locked doors, begging for their savings. Inside, tellers try to stay calm. Your money is safe. It isn't. Families lose everything. Generations of savings vanish, and the damage spreads outward. Global trade collapses. European economies stumble. Still, newspapers print optimistic headlines. Market adjusts. Below it, a man sells his wedding ring to buy bread. A country on its knees. By 1931, the music is gone. Unemployment hits 25%, one in four Americans who want to work. Can't find a job, factories shut down. Production collapses, breadlines stretch for blocks. Children faint in classrooms, not from boredom, but from hunger. This isn't metaphorical poverty, it's real. Dust, despair, and anger. Then the land itself turns against people. Years of over-farming strip the soil bare. Rain stops, wine comes, dust storms rise like walls. Crops vanish. Homes fill with dirt, families pack up and leave. California, or bust, often just bust. Trust in institutions evaporates, crime rises, radical ideas spread. America isn't just broke, it's broken. When the government turns inward. In 1932, war veterans march on Washington. They need help now. They're told no. Then the army arrives, tear gas, burning camps. The country watches itself on the news and doesn't recognize what it sees. The turning point. March 1933. Franklin D. Roosevelt speaks. The only thing we have to fear is fear itself. It's not magic, but it's a pause, a breath. Rebuilding, piece by piece. Jobs return, roads, bridges, schools. Rules are created, banks are restrained. Deposits are protected, people stop running in panic. They start depositing quietly. The system doesn't become perfect, but it becomes safer. The lesson that never expires. Bubbles feel obvious only after they burst. High return always comes with high risk. Leverage amplifies mistakes. Markets punish arrogance. Liquidity is oxygen. Money works for those who understand it, but systems always behave exactly as they are designed to behave. The real question is this. Next time, will we notice that we're dancing near the edge again? If this story made you think, hit like if you've ever wondered whether something like this could happen again. Leave a comment, and if you want to understand money, history, and the cycles humans keep repeating, make sure to follow the channel. There are more stories ahead.